How's it going, everybody? Can I get a mic check as we start the tape here? All right. Thank you guys for being here. Today we're discussing the inside bar breakout. What is the inside bar breakout? Jesse Livermore once said, "The game taught me the game. It didn't spare me the rod while teaching it." The one and only, the big papa, the big cheese, Jesse Livermore. Uh, my sincere desire is that you are spared the rod somewhat by that is Jesse Livermore, Cypher Dad, the greatest trader who ever lived, in my opinion. Or one of the greats, anyways. Yeah, it is. Technicalities, Kelly. Anyways, so props to Mr. Livermore. What uh, what I think is significant about this quote is how observant Jesse Livermore was of the market, of the price, of the action, of the order flow, and it's something that I try to always emphasize with you guys how important it is to truly observe the behavior of the market. So when we're talking about breakouts today, it's going to be a very pattern-oriented conversation. I really want you guys to truly focus on the bigger overall picture. The market has a language, right? Order flow, price action. Those two things are speaking our conversation between buyers and sellers. And it's within that we use patterns as almost like as a reticle on a sniper scope to really fine tune our entries and our exits. That being said, I'm sure you guys have been peppered your entire careers with these patterns, right? The bullish flag pattern, the bullish pennant pattern, the bullish falling wedge. How many times do you guys hear me say, I like this falling wedge here, I like this rising wedge there, this bear flag looks good. What's so special about these? Like if you guys had to, if you'd never seen a bull flag before, what would jump out at you first? What's special about a bull flag? Okay, exciting. It's an igniting move and hopefully a continuation pattern, right? All these patterns, you'll notice, have an igniting move, a consolidation, and a continuation of that igniting move, right? You guys always hear me talk about measured moves. Measured move here, measured move there. They're continuation patterns within a move, which brings me to 2 points. It's really important to be able to couple these bullish continuation breakout patterns with the greater overall move that's either about to take place or taking place, right? So, take this bull flag here, for example. We have this igniting bar, right? They call it the flagpole. What's happening in the flagpole? Right, it's the igniting move. Buyers are coming in. Why does it undulate and consolidate here? What's happening within the body of the flag? Happening. You guys had to explain to me higher highs, well, technically lower highs, right? Consolidation, yes. Consolidation is exactly what's happening. Price action is definitely contracting. That's true. Why is it contracting? Why is it compressing? Lots of good answers. What's happening? You have a reduction in volume, hopefully. Some flags actually have an increase in volume. So buyers who bought the bottom of the pole, right, are taking some profits up here, maybe adding a little as the consolidation moves forward. But why is price compressing? Why is the price action compressing? Because the answer is we're resolving a supply and demand imbalance, right? And that imbalance is achieving what? Imbalance is achieving what? What do we say markets are? Equilibrium, exactly. Markets are the never-ending search for equilibrium. Exactly. And once equilibrium has been reached and there's more demand than there is supply, what happens? The breakout happens. Exactly. You guys will hear many traders in this room constantly talk about compressing moving averages, compressing pre-market action. You'll talk about, you know, Kelly will talk about compression constantly. It's the same exact idea, right? Price compresses until equilibrium is reached and supply demand imbalance reaches a tipping point and you either break up or break down. Okay? So this is typically what a lot of you guys have been taught, right? Flagpole, consolidation, breakout over the flagpole, bearish flag, flagpole, consolidation. When there are no more buyers of this ascending line, what happens? You achieve breakdown and you get your measured move. Right? Pretty simple. We've all been taught this. We've all read it. We've all played it. How many times a day do you guys hear me uh, take these moves, these types of trades? Like dozens of times a day, right? You're loading the spring, right? Buyers come in, they sell a little bit here. More buyers come in, sellers, buyers, tighten into the apex, and the continuation resumes, the breakout resumes, and you get your measure. Okay, so what is the inside bar breakout? The inside bar breakout is a 3 or 4 leg move. It's one of my favorite plays. And it consists of a signal bar, right? Typically, this bar number 1 is your igniting bar. We play this a lot in news flow when there's when there's a piece of information that the market had not priced in, right? And that information comes out, you'll often get a very strong igniting bar. When Bullard says something, or when the Fed comes out with news that the market hadn't priced in, you'll often get igniting bars to the upside or the downside, right? And the second step is a resting bar, right? Consolidation. Now, what are the two ways price can consolidate? Yeah, it's a 1-2-3 pattern. Some people call it a 1-2-3. People call it a 3-bar play. This pattern is as old as trading itself. JP Morgan, Livermore, they had the same pattern back then. Exactly, right? Price can consolidate through time, price itself. So this pattern is powerful because you have a tremendous supply demand imbalance and your resting bar doesn't give up any of that move. Price does not go any lower. If price doesn't go any lower than the top, you know, than the top like 90th percentile of this bar, what is that telling you? We have a huge igniting move, and price stays right near the tippy of this bar. What is that telling you? But why? What are you lacking there? There's no sellers. There's no one wanting to short this. Would you like if you covered this up right here? If you covered this up here, are you looking to short this move? I'm not, right? And so after your consolidation, now some people will take this with two resting bars, one resting bar, but the idea is the same. You achieve your consolidation, and then your entry bar take right over the top of this resting bar. Write it for a measured move. You can write it for a pullback into the 21, right? When does a breakout become a channel? When does a breakout become a channel? Anybody? Breakout becomes a channel when you achieve a lower low, right? So here we have our first pullback, right? And we have a channel forming. So if you took this and you held it past the measured move, you can hold it into the 21. You can add on the pullback. Exactly. So this is the basic idea behind the inside bar breakout. Now, a lot of people, especially novices, will take this pattern wherever they see it, right? And that can be a very serious problem. Pattern myopia is a big problem with especially novice traders, where you're so happy. Type 11 if this has ever happened to you. Like, have you ever, especially when you started trading, you saw a pattern, you were so excited that you found it, that you just executed the trade, and you were buying into secondary support, into pre-market highs, into VWAP, into all three at once. You were buying into a Volkswagen for all you knew. Yeah, exactly. Yeah. You got to do what, guys? What do we always say? You got to look to the where? Look to the left. Always look to the left. So important. So in your inside bar breakout, we're going to look at a few chart examples and a little bit of context. So example 1, 2, and 3. Which is the better setup? Please vote. Type 1 if you like 1, type 2 if you like 2, type 3 if you like 3. Couple of ones. 2. Can't choose 2, Ari. 3. Got some 3s. We got a lot of 3s. Interesting. Why do you guys like 3 better? Curious. Interesting. All right. Thought we were gonna get that you look the same. They do? What's the difference between 2 and 3, Davis? Yes, Ari, exactly. Here you have a brand new igniting move. Example 2, you have a one and done of an igniting move and a resting bar. Example 3, you have a 3-bar old play that you're now hoping has enough juice for a measured move. Which one would you feel safer taking? 1, 2, or 3? Yes. Price action is like an athlete, right? It's like a sprinter. Which move is more tired by the time you get your resting bar? Yeah. This guy's, all Red Bull and vodka. It's ready to go. Number 2 just ran a 10K. Number 3's been running away from zombies for 10 miles, right? Example 3 is tired. This has had a really big breakout move here. Overextended. How do you set your risk here? How do you set your stop when you run up 3 bars, right? Remember, the risk reward equation isn't just risk reward, it's risk reward, and what's the third leg, guys? What do I always repeat ad nauseum? Probability, exactly. What's the likelihood of you taking this third igniting bar, waiting for this resting bar, and not having, whoops, and not having a retest lower, like much lower to the point where this becomes difficult to hold? It's extremely high, right? Is it higher than, say, example one? Exactly. So now your risk is higher, your probability is lower, right? And this is a move that is much harder to take. All right, so let's take a look at Apple. Here's an example, I believe this week. Okay, so we've got Apple here. This is the close. Apple gaps up, uh, V bottom test. What's this right here on the left? The failed bull flag, right? Yeah. Uh, it's a, I don't know if it's an ascending wedge. Yeah, I guess it's a failed wedge, right? You broke out here very strongly. You consolidated. You broke down. So what happens when the breakout fails? You enter what? What do we call this? Bearish channel, right? We consolidate into these early lows. What do we call this? Double bottom, exactly. And what do we call this here? Higher low, right? So let's put the sequence together. Ignition, breakout over the 200. You have 200 to 21 right here. Very strong place to be. Nice gap up, retest, holds, bull flag fails, wedge fails, whatever you want to call it. You consolidate in a bearish channel, double bottom, higher pivot low. See how you ignite off this higher pivot low? 21 retest, Evel Knievel, whatever you want to call it. Higher low, bull flag. So at this point, you know that you're already in a move higher, right? You lost the chance to enter this higher pivot low. This was an uncertain, overly aggressive move. For some reason, maybe you were having a matzah sandwich like me. You missed your Evel Knievel, right? Your 21 retest. You missed your bull flag. What does this pattern now give you the ability to do? You have resistance here, right? But this igniting bar breaks that resistance level and holds the price. This pattern gives you the ability to enter this move past this level of resistance once you know it's holding the level with a relatively low risk and an easy measured move target. That makes sense? So one of the things about my style as a trader, guys, and you guys, you see me do this all day long, is I look at patterns a lot, but what is the thing that I'm constantly more mindful of? It's price action and order flow, right? Constantly talking about order flow and price action. Price action being the action of price across levels, and order flow being the behavior of patterns and the behavior of tape as it moves through those levels. So when I'm taking this pattern, I'm always taking it in the context of this sequence. I'm not taking an inside bar breakout because it's an inside bar breakout. I'm taking an inside bar breakout if I'm taking it here, and I missed my earlier entries, because this is part of a sequence that is all about retesting these highs and going higher. The story of this day is an IOU from 10 o'clock. At 10 o'clock, the bulls tried to push past 168.9, right? That's what happened at 10 o'clock. This entire rest of this session, right, is about the bulls challenging that level and going higher. Yeah, sorry, my headset having some issues. Hold on a second. All right, next example. TSLA. This is from a little while ago. So Tesla gap down. This is the previous session here. Pretty tight base into the close. We gap up again over the 21,200 crossover on the 2 minute. Okay. Uh, we break higher. What happens here? We have a falling wedge into the 21, right? What happens when Tesla tries to bounce off the 21? Failure, right? We're constantly looking for failure. There's two sides in this game, right? There's buyers and sellers. One of them is, unless you're in a choppy sideways range, one of them is always doomed to fail. Right? So as we study price action and order flow and try to insert patterns into that, we're looking to see what narrative, what price narrative is winning and which one is failing. So Tesla, beautiful start to this session, right? But it ran into what over here? It ran into overhead supply. You had your pullback here, and buyers just did not come through into this falling wedge. And so what happened here? What happened right here? You had a sell setup, right? So say you missed this sell setup right here in this first igniting bar, right? You missed it through this pivot low. You missed the sell setup. What opportunity did you have next? Have your resting bar after the igniting bar, right? And you shorted the low here right back into the 200. You reverted right back to the mean and to this pivot high. Yep. Dive into the violence. You got to dive intelligently, though, Alibaba. Make sure the pool is filled at all. Just saying. 3 bar play. It doesn't matter what it's called. This is universal pattern. So what's important here is that you guys learn to look at these patterns within the context of the price action and order flow. We gapped higher, crossed the 21, bullish move. You failed on your first pullback here, right? Tremendous volume into the open. On your first pullback, you fail your snapback. You have a little shooting star reversal. You sell off hard. Say you miss this sell setup. The inside bar breakdown or breakout will give you the opportunity to still enter the trade. And here you would have gotten a full measured move and then some back to the 200. So that's the advantage of this particular pattern and why it works so well. All right, Facebook. Okay, this was like yesterday or the day before. It was a couple of days ago. Facebook's been ripping, right? So we have a narrow base, the previous session. This is the end of the session, right? And again, 221 crossover at the open. Igniting bar, resting bar, igniting bar, right? What happened beyond this igniting bar? What level did we break here? This was the pivot high of the previous session, right? So in one igniting move, you're breaking the previous session high, putting in a consolidation bar right here, and moving higher. Now, once this breakout uh, achieves its measured move and continues to move higher, right? As far as management is concerned, say you decided not to take profits through the measured move, say you decided to take half, then you need to be aware that your that your breakout is going to turn into a narrow channel and then into a channel, right? If you look at the angles here, you have your narrow channel here. What happens after this bar? Do you see how the channel widens for the rest of the day? This is the progression of price action uh, as buying wanes, right? As the buying de-intensifies. So as far as risk management is concerned, a lot of traders in this room like to sell under the 2-minute 21. That would have kept you in this trade until 11:30, right? If you had sold the first 2-minute low, a closing low, it would have kept you in the trade past 10 o'clock. So how would you measure the measured move? Simple. You take the length of the igniting bar and place it past the entry bar, and then you get your measured move. Yep. All right. That's my cheers. Any questions, comments, complaints, criticisms? Why is that an entry bar? So in an inside bar breakout, your signal bar is the igniting bar plus the inside bar. Your entry bar is the break of the inside bar. That's what it is. It is recorded, sir. Yes. Hmm. Uh, yeah. Most of my trading is done on the 2-minute, the 5-minute. So that should be okay. Yeah, I don't have an issue with that. This is a 2-minute chart, as evidenced by Facebook and the number 2. Yep, exactly. Super powerful pattern. These igniting bar consolidation, especially when they break a key level, have a very high probability of working. And when you're taking the first igniting bar, some people like to set a stop at the bottom of the bar, but if you set a stop in the, you know, uh, top 20% of the bar, it's still a very tight risk. Some people like to set a stop at the bottom of the inside bar. I think that's a little aggressive. In this case, you had a very simple stop, right? Because you were crossing an important price pivot. So if you set your stop right underneath that price pivot, look at your risk reward. That's maybe 20 cents in Facebook, 30 cents in Facebook versus a $4 move. The risk reward is insane. So you recognize the setup has failed if the entry bar, which is this igniting bar, reverses on you, and in this case, uh, takes out this blue line, which is the pivot, right? You would know that immediately, and that turns into another trade we like to take here that I call a pain trade, right? It's when you have your bulls who are trapped, thinking you're going to break out, and instead you take out the resting bar lows, you take out the pivot low, the bears jump in, the bulls panic sell, and you have a beautiful short. So, yep. Question: after wedges form JR, do you enter or sell immediately at once? Well, hope we're not talking about wedges right now. We're doing inside bar breakout talk, but I can talk to you about it at 7 if you like. Do you also buy inside break? Example: three big red candles, and then an inside. Uh, Not typically, unless it was. So Sebastian, that's a really good question, right? So say that there were like 3 really big red bars here. I might I might take that if it was into a very strong level of support, or if news broke out and you had a powerful reversal pattern. But typically, it's like Newton's laws of motion, right? Objects in motion tend to stay in motion. So if there's three giant red bars, um, and then I have an igniting bar, unless it's a true turnaround bar where it's engulfing the red bar, and then giving me an inside bar, I would be very cautious to take it. But if it's a full turnaround bar, which is something that I'm giving like a full blown class on, and into a level of support, or maybe you've got news flow attached to it, then yes, that's a really powerful pattern for sure. Very powerful reversal pattern. Well, I was talking about the most of the consolidation, continuation, breakout patterns we've been taught in the past and what they have in common as a way to get into the inside bar breakout, which is a more condensed type of the same type of trade. Right, you're not flagging here for 8 bars. You've got an igniting bar and a very tight consolidation in 1 or 2 minutes, right? The fact that this goes after 2 minutes shows what? It shows urgency. It shows ravenous demand from buyers, right? People aren't even letting this bull flag. They're not letting this wedge. There's no sellers anywhere. There's an appetite to go higher. It is such a supply demand imbalance that they're not even giving this the time to correct. They're just jumping right in. Yes, the big the big panda bear tracks. Exactly. Ravenous. Indeed. So, we call these out uh, every day. The wedges, the flags, the inside bar breakouts, and I think they're a very important part of anybody's trading vocabulary. And what I do personally in terms of my style as a trader is I like to play these within larger moves. You guys saw today how we entered a short in the cues off of a level and off of a sell setup, and then proceeded to extrapolate the bearish channel that it ended up forming. That's part of my approach to seeing the bigger move and then playing the patterns in context of that. Tesla is like the queen of the inside bar breakout. It's like you get so many every day. It's crazy. All right, guys. Any other questions? All right, awesome. Please email me any follow-up questions if you have any. We can discuss this more at 7 if anything was left unclear. And certainly if we have any more examples today, I'll make sure to be calling them out. Awesome, guys. Let's get back to training then. I'm going to take a quick break. I'll be back in 5.